Morning brief for the U.S. grain markets, October 29. It's 8:11 a.m. Eastern Time and Rich Positive, a critical point. The weekly update will probably be a little later than normal, but still slated for today. But as always, any of the large updates on Friday can delay to the weekend. In the weekly update, we're going to take a look at a simplified point of view of why inflation's unlikely to be extremely high this decade, and more specifically into next week. And we'll probably take a look at the strong ethanol prices in the Eastern Corn Belt. At any rate, and of course we're going to look at the larger trends of what's going on here in the markets, and I'm a little bit suspicious. We'll show you a weekly chart where we've got a prior price objective and the market met that upside objective, but also a time objective where probably by next week is the latest for a large run-up. And we'll explain that, how that actually turned out better than we thought. At any rate, where are we right now for the near term? What's going on today? And this is we want to look at the December corn chart, and basically we realize the 558, 559 level kind of worked a little bit for resistance, and then the next level is right around 565, 566, worked there as well. And then you want to watch yesterday's high, which was right around 568, and then move. The next level is going to be about 572, and finally we have a level at 579. So we still have outstanding upside targets as just a rather low probability right now. The model still is saying just keep throwing these darts. There's got to be a level 3 top here. It really ought to be over and done with. Stretch the rubber band. They got carried away. Too much inflation talk, getting carried away, irrational. And then, of course, we got a seasonal turn, and it is possible the market has got a better seasonal trend than I think, and it can remain firm into December. Keep in mind, corn prices and generally soybean prices bottom around October 6th, move higher into the end of the year. And that's probably what they're working on here somewhat, okay? But the model's still saying, really, it shouldn't be that firm of a market going out into December unless we're going to get some South America stuff going on, and we'll talk about that in a weekly update. So bottom line is I'm still looking for lower prices next week. They can even stay down into early the following week. So trade below yesterday's low at around 554 would give us a signal that we probably got a level 3 top. More so if we can actually get a close below that price. Now, about time it does that, we're all probably going to have to look at the 5-day average as potential support. Daily stochastic, in my opinion, still overbought, very narrow spread, could easily flip to a sell signal. It's had a few false sell signals, so I think the next one's going to stick. I think probability is rising that it will work. All right, let's swing over to the March soybeans now. In the March soybeans, we do have 1280 to 1289 as potential upside targets. You can also draw a line between that range if you want a single price level to try to be more precise. And even though I'm not calling that an upside target, I think if it wants to rally there, I think it is going to be resistance. The daily indicator stochastic is just kind of hovering near mid-range. It's not acting bullish at all. I think the only reason soybeans pop every few minutes and whatnot is trying to have a little sympathy trade with the corn market, but overall, I think soybeans want to go down. I just don't think we got the available demand there to push it. And so here again, watch recent daily lows, starts trading below those lows, more so if it closes below, say, yesterday and the prior day lows. I think that's a signal we're on the right track, level 3 downtrend, and I think it goes down through next week into the following week. It can actually be a little more time to the downside than corn. And as far as downside objectives, I think beans are only worth 1221 to 1207 at this time. And looking farther out in our long-term bearish scenario, we can come up with much lower prices for all these markets. But this is what we're looking at least near-term downside potential. Resistance, of course, could be the overnight high, yesterday's high, and then, of course, the high of the week. All of those would have to be watched for signs that we're wrong, and it still needs to work higher. But the best forecast is it's probably going to work lower over time here. Now let's move to the December Chicago wheat. And basically, we had levels that worked right around 759, another one around 765, another one around 771. But yesterday it got a little heated up here. It went above those levels, didn't respect them, came back, and it closed near it yesterday. So I was thankful for that. Overnight, you can see they slammed it right back up to create a 2-day double top. Well, you know my stance on it. I have my little sugar story there where we made a lot of money out of options betting against a 2-day double top. And so I question, is that going to hold? Is that really resistance? Is that really a top? For the moment, the model's paying no attention to that technical. It's simply saying, well, I shouldn't say that. It's saying, keep focused on the level 3 top. Don't worry so much about the 2-day top. That could mean that it's actually going higher, that it's not going to work as a top. The model's saying, keep probing for the level 3 top. And the model is also saying it can go down all of next week and early following. So it looks as though what's occurred here is the available demand got a little carried away and created a lengthier level 3 trend, went too far with it, and available supply probably held out a little too much. Might be that seasonal factor, might be the fact that they think they're going to slam the bend doors shut, not sell any grain, that they got enough harvest and all that, and tighten that market up. But what it's saying is now you can do the exact opposite. You can have a lengthy downtrend, okay? So I think wheat's really only worth 728 to 717 over time. Not saying it will actually go there next week to early following. The 5-day rolling forecast is still offering just a retracement level. But I think the thing to watch is I just noticed the overnight low is right at that level around 765.5. So it's kind of responding that as maybe that instead of resistance, maybe that's now support. But if it goes down below it, I think that's a little sign of weakness. We then have to deal with the 5-day average around 762. And then we, of course, have to deal with that former upside target of 759 as possible support as well. But as it comes down through those potential support levels, I think that's a sign of weakness. Obviously, to really feel comfortable with calling level 3 top, I really need a return to around 755 on down to 750. It would make it look pretty good that this market has rolled over. And something else we'll talk in the weekly update is the commodities, indexes, and the energy markets in relation to that inflation story, but also in relation to a direct connection to the grains. There's no doubt in my mind the December 2022 corn contract is reflecting the higher fertilizer cost that's related to higher energy costs. So it is working, it's doing what it should do. I saw a tweet from a farmer saying, and his best guess is his cost for more ammonia and this and that added like 25 cents a bushel, and his guess was, yes, that contract next year is reflecting that. So in my mind, that means these things don't really have to go that much higher, that this story of massive cut in corn acres doesn't have to be a big deal for a few months yet. In addition, we're seeing some analysis out there in Twitter land that's basically saying you really don't need a big run-up in grain prices because you're not going to get a massive cut in corn acres. You're just going to get a cut in corn acres. Something else to consider. All right, that's all I've got for you this morning. I got to run. I got projects here, and I'm going to get my booster shot, and I think everybody should get their booster shot. And as we get back in the office later today, we'll see if we can get that weekly update wrapped up for you and get it out the door. And other than that, I think everything's rolling along here. We're just going to have to ride out this lingering available demand over available supply here. But ultimately, I think I want to stay with the attitude that these prices will at least drift lower. I'm not saying the market hasn't discovered some floor prices for a while, specifically for corn, maybe soybeans. Okay, something might have changed there, that we've got a solid floor price near $5 on the corn market, but I think 550s and higher, we got a lot of supply in the corn market as well. Past results are not necessarily indicative of future results. Thank you.